Hey, Nicole here. I am the affiliate manager of PhotoBooth Supply Co. and an owner of a photo booth company called Own the Moment Booth. I am so excited to bring you an exclusive interview with a CPA. I know when I was starting in my photo booth business journey, I had so many questions about what structure was best for my business and if all the gear that I was purchasing would be considered tax deductible. And if you're anything like me, you have those questions too. In this interview, Brittany Settle is joining me to discuss all of that and more. Make sure you stay until the end for a special takeaway to help you further in your business journey. Until then, here's the interview. Brittany, I am so excited to be introducing you to our community. We have so many questions about taxes and starting businesses. So I would love for you to introduce yourself to our audience.
All that fun stuff. Yeah, I'm excited to be here as well. I know money is not everyone's favorite subject to talk about, but it's my favorite subject to talk about.
That's
So
awesome.
my name is Brittany Settle. I'm a CPA. I run a online virtual bookkeeping and tax firm that's really aimed at helping female entrepreneurs, but we work with male clients as well. But just helping them with the bookkeeping and tax aspects of their business. And we really like to say, we want our clients to feel like they are a partner with us and that they can come to us with questions and whatnot, not feel like they are being talked down to, anything of that nature, because we get that a lot from our clients with previous experiences they've had with their CPAs. And we just really want to be that advisor to them. I've had the firm probably for 5 years. I think I started it 5 or 6 years ago. I don't know. Time flies.
Yeah.
Something like that. And we've just slowly and steadily grown. And it's just been fantastic. And under that umbrella as well, we also have a brand called Prosper Simply, and that's more of our kind of education platform. So we have courses. I just told you we're launching a podcast and YouTube channel this next year for that to help those entrepreneurs who are still kind of in the DIY stage. They don't have the funds, or it's not just financially feasible to outsource everything yet, so that they can get some good financial education. They can really build their wealth and do that cost effectively until they get to the point where they can outsource. So I live in, just a little background, I live in Indianapolis, Indiana. And I have two little boys who keep me very, very busy outside of work. And then my husband and I also invest in real estate. So we've got our hands in
Hands
12,000.
full. Yeah.
Yeah.
That's awesome. Well, thank you so much for introducing yourself. And I love what you're doing and your heart for helping people get started in the business. It's a huge undertaking when you're starting, and it can be incredibly overwhelming. So having someone like you on their side, I think would be so beneficial. And thinking of a photo booth owner and kind of their journey, when would you say would be a good time to reach out to a CPA or a bookkeeper? Like, could you explain a little bit of that?
Yeah. Yeah. So I tell people the first investment you probably want to make within your business when you start outsourcing is a CPA or a tax preparer for your tax return, because you don't know what you don't know, and they're experts and can probably save you a lot of money on taxes just for that piece. So I would say first and foremost, first investment, make it someone who is knowledgeable that can prepare your tax return. From there, you probably want to eventually, unless you love to do bookkeeping and it is your heart and soul, which for 98% of people, that's not the case.
Yeah.
But from there, I would say, once you get to the high 5 figures into 6 figures in revenue, then maybe you would consider like a monthly bookkeeping package. Before that, maybe you can get away with like an annual cleanup or something of that nature, or someone to just review what you've been doing if you do it on your own. I tell people, if you're like in the $40,000 to $50,000 range, the benefit of the monthly bookkeeping may not outweigh the cost at that point. And with new businesses, like cash is king, and you want to make sure you're using the money that you have in the best way possible to grow and expand and scale and whatnot, and also pay yourself and make sure you have money for taxes. So sometimes it's not the best use of funds when you're in like the 40, 50, $60,000 range.
Got it. Okay, that makes so much sense. So, is there a difference between a CPA and a tax preparer, or is that they one and the same?
So, there can be. So CPA stands for Certified Public Accountant. To get that designation, you have to take like 4 different tests and whatnot. And each year you have to take continuing education courses, ethics courses, all kinds of things to keep your license with your state. Now, CPAs can do a myriad of things. They can be tax preparers, they can be, CFOs of corporations. So just because someone has the CPA designation doesn't mean that necessarily they do taxes, but they can. So you can just have someone who's not a CPA and they are tax prepared, and they're what's called like an enrolled agent, where they can actually file tax returns. They're hopefully and supposedly knowledgeable on like the tax prep side of things. So that's one like thing to keep in mind. Your tax preparer doesn't have to be a CPA, but they can be. And it just means that they have to hold themselves to a certain standard, continually take those education courses and whatnot.
Awesome. What would you say are some of the things that owners should be looking for when they're looking for a CPA? Would it be that
So in terms of like a tax preparer themselves, if you're looking at the tax side versus the bookkeeping, so you want someone who is knowledgeable in your field or industry. I have found a lot of people that come to us, they've been working with people who are, let's just say, they're used to like how things used to be done. And they aren't as familiar with like the virtual world and all the software, and like just it's a different climate that we live in nowadays with technology. You want someone who kind of knows your business, your industry. You want someone that you can trust to come to with questions and doesn't talk down to you. Also someone who doesn't necessarily ghost you. I've heard a lot too, where people reach out to their CPAs and they don't hear from them for weeks, months. So just having someone who, again, is like reachable. Now, how you find that person? Referrals. Honestly, if you can ask people that who are in your industry, who they work with, if they would refer them to them, if they've liked their experience, sometimes that's the best way to find a good accountant. Now, on the bookkeeping side, very similar. You want someone who, again, is knowledgeable about your industry, is very communicative, and may have at least a little bit of knowledge of tax, because when you're a small business, it overlaps so much. Like you want someone to know a little bit of the tax law at least, so that they can obviously help direct you in some areas there as well.
Yeah. Is it important to have and find a CPA that's like local to you, or is at least aware of like your state restrictions? Or
you want someone, I would think, that's worked in your state with clients in your state. It doesn't necessarily have to be someone within your state per se, but sometimes people like that, and that's helpful, and that's completely fine. But I wouldn't say it's a necessity. Okay. We have clients, all over the US, from New Jersey to California. So
that's good to know. Okay. Would you, so as people are beginning their business, it's common practice, I would say, to start an LLC. Would you recommend that?
Yeah. So that kind of depends on your situation and sometimes the state you live in.
Okay.
So the purpose of an LLC, whether you are a sole proprietor, which basically just means like you kind of flip open the open sign, you have your you're running services, doing whatever, but you have it registered with the state as an LLC, whether you're a sole proprietor doing that or you actually register as an LLC, you can still take all the deductions, everything, either way. Like getting an LLC doesn't mean like, oh, now I can take, all of these costs as deductions. You can do that either way. The LLC is just there to limit your liability and protect your personal assets. So with an LLC, what you're saying is if for some reason I become liable for some damages within my business, if someone were to sue me, they could only take the assets within my business. If I didn't have the LLC, then they could also take my personal assets as well. Yeah. So, not great.
Yeah.
Now you have to weigh that with the fact that being an LLC comes with additional fees. So you do have to register with the state. You do typically have like annual registration fees that you have to pay. And depending on your state, those vary greatly. Here in Indiana, like every 2 years, it's like $30. In California, it's $800 per year.
Wow.
So yeah, very, very different. So sometimes you have to weigh the actual risk of being sued versus whether you want to be an LLC or not. Because in California, I mean, if you're paying $800 a year, maybe it's not worth it until you get to a certain level. Now, if you have a lot of personal wealth, you have a high net worth, sometimes it might just make sense either way, wherever you are, to get the LLC because you want to protect, you don't want anyone to be able to come after your personal assets, especially if you have a high personal net worth.
Yeah, absolutely. That sounds terrifying.
Yeah. Yeah. No one wants the rug ripped out from under them.
No, thank you. Yeah. At what point would someone consider, and I'm sure this is a personal conversation with their individual CPA, but at what point would you consider transferring to an S Corp?
Yes. So that is a great question. I actually have a free course and I'll send you the link so that you can distribute that out too. But there's a free course all about S Corps and like when it makes sense to make that transition. But essentially, when you are, I tell people, when your business is profiting, so that is after all expenses, so sales minus expenses. When your business is profiting roughly 20 to 30,000 more than what you would pay yourself as a reasonable wage, like an annual salary for the work you're doing, that's when it would potentially make sense to switch to an S Corp. I tell people always have the conversation with your CPA or a CPA before making that transition, because there's a lot of different nuances that come with being an S Corp and you want to make sure it makes sense. But let's say you're working full-time in your photo booth business. You'd say reasonable salary for the work you're doing. If you were to hire someone else that would have to do it, let's just say it's $40,000. So once your business is profiting $60,000 to $70,000, that may be the trigger point to when an S Corp would make sense.
It's all such a confusing landscape. So I think just having that professional person and voice is just so important. So definitely, talk with your CPA to get clarity for sure.
Yeah. And I tell people, you don't have to be an expert in the tax side or the financial side, but you want to know enough to be dangerous. So if you come away with the conversation with your CPA when you discuss, moving to an S Corp or anything, and you're confused and you don't fully understand the benefit, like, don't do it. Come back, ask the questions, make sure you understand why it would be a good move and what it all entails before you make that jump.
What would you say are some of the important things that a photo booth owner should do when they make that decision to start their business to prepare them financially for success?
Yes. So, number one is please get a separate business bank account.
Yes.
That's all I request. So it's very hard. And, I feel like people make it very hard on themselves sometimes when they start commingling everything. And one, it makes tax time a complete nightmare for you. And I don't want anyone to have to sit and like cry for a full day trying to get everything prepared for tax season. No one
Yeah.
wants to do that. So having that separation definitely helps because you're like, okay, this is all my income, all my expenses went through this account. It's separated. And then two, it also provides clarity when you have that separate bank account to, okay, am I at least like making money? Is there cash in the bank? Right. It's one of like, I prefer you actually have like full income statement and yada, yada, yada. But if you aren't there yet, you can at least say, okay, this is working because my cash balance is at least increasing every month.
Yeah.
Kind of thing. Number two is, again, not hiring someone to help you prepare your tax return. I see a lot of missed deductions and a lot of missed tax savings by not having outside help there. And then two, just keeping things organized. Like when you register for something, make sure you have like a folder on your computer where you keep all like your registration documents and just anything you've received from the IRS, that kind of thing.
That's perfect. What should some business owners be
Yeah.
tracking throughout the year?
Everything. You really want to track, obviously, all of your income. I know a lot, maybe not in the photo booth world, but some people really rely on like receiving a 1099 from their client to know how much they made. And that's not on someone else to track. That's on you to track. So make sure you're tracking all of your income so that you know, like, how much should I actually make in sales this year? Yeah. It's important because it helps you determine, projections for next year, what your capacity is, that kind of thing. So obviously all your income. You want to track basically everything related to your business, all the costs that you have. So any software, any marketing, advertising, any like mileage costs. So if you are driving to drop off this equipment, at an event venue or whatnot, that mileage is deductible. So you want to be tracking mileage, and there's some great apps that can help you do that, like Mile IQ.
Yeah.
If you have QuickBooks, they have as part of their app, they have a mileage tracker. So that makes it a little bit easier on you.
Yeah, I was just gonna say, any recommendations on software to track income and expenses? Some of us use CRMs like Honeybook, CheckCherry. Have you worked with those platforms before?
Yeah, Honeybook it's good for the income side. I wouldn't say necessarily like the expense side. It's good.
Right.
Because it is really just more of like it's a CRM. So
Yeah.
it's tracking your clients, it's tracking your invoices in there, but it's not looking at like the full cost picture. So I personally, like the clients we work with, we only work with QuickBooks Online. It is, I don't want to say pricey, but could be semi-pricey. It's like 20, $30 a month just for that software. So if you're in the early stages and you want something that's a little bit more cost effective, you can use Wave, which is a free online accounting software. You connect your bank accounts, you just go in and categorize everything. Or again, through our Prosper Simply brand, like we have an Excel file that basically you can do the same thing. You download your transactions and then you categorize, and it creates your financials and this nice little like financial dashboard for
That's
you.
amazing.
Yeah. So I would say one of those three, like have like some type of Excel, Google spreadsheet model, Wave, or like a QuickBooks Online, or Xero is another one that a lot of people use.
That's awesome.
Yeah.
Yeah. So tax deductions, obviously, and write-offs are always a conversation, always a topic of conversation,
Yeah,
right?
absolutely.
What are some examples? And it doesn't have to be a thorough list, but like, what are some examples that are top of mind that would be considered tax deductions for photo booth owners?
So, obviously the equipment itself, right?
Yeah.
So, that's going to be a write-off. And, depending on the cost of that equipment and other equipment you may buy in your business, you can either take that expense all in one year, or you might have to basically allocate that expense over, 5 to 7 years ish. But that definitely is a write-off. Like we talked about mileage. If you rent an office, that can be a deduction, or if you have a home office, you can also take a deduction for home office costs. And there's different ways of doing that. You also have any supplies for your business, office supplies. So if you have a home office, and you buy, let's say, a mouse, deduction, a candle. If you have office decor, like you have a picture on your wall, which I do not, I'm sorry. You guys have to stare at this blank wall, but that can be a write-off. And that's what some people miss. Like even if you put like a rug in your home office, that can be a write-off. It's a business deduction. Like we talked about before, advertising, marketing. So if you have a Canva subscription, if you do Facebook ads, anything like that, that can be a write-off. Meals. Now, meals is a weird one. I don't know if you want me to dive into it, because depending on the type of meal, it can be a deduction or it can't. So
yeah, so maybe I can give you a scenario.
Yeah.
So say we're going to an event and maybe it's myself and my team, and we're going to go grab a bite to eat before our event starts. Would that be considered deductible?
Yes, if it's with you and your team per se, and you're buying it for the team, you could. Now, if it is, let's say you just going and dropping it off and it's within like your, I would say like city, typically that is not. But if you're traveling a far distance, it would be. So if you're having to travel, let's say 2 hours away to drop this thing off, then that would be considered like a travel meal.
Got it.
Does that make sense?
I can see how that would be kind of tricky.
Yes.
When you're tracking these events then and kind of tracking these expenses, would that just be something that they write down and then talk with their CPA later about? Like, what would be the best way to approach that?
Yeah. So I would say if it's going to be like a business meal, and it's like a business meal, meaning it is deductible. So you are traveling a long distance, or maybe you're hopping on a plane to go to a conference, or you took you bought everything for your meal, run that through your business bank account. So keep that separation. If it's just you driving 20 minutes down the road to drop this off, that's personal. So just put that towards on like your personal debit, credit card, whatever. If you're not sure, you can book it to your business account, and then just reach out to your CPA. And if they determine it's not, then they'll just put it as kind of like a personal expense, and you'll be fine.
Okay, awesome. Okay, so I do want to ask this question in case anyone listening just really doesn't have some of that foundational knowledge. When we say write-off, like it's a write-off or it's deductible, like what does that even mean?
Yes. So write-off, deductible, those are kind of interchangeable. Basically, it just means that the IRS is going to allow you to take that as like a cost against your income. So if you spend $1,000 on, I don't know, let's say a laptop, we'll say that is a deduction. It's a write-off, which means during the year, let's say you bring in $10,000, that $1,000 will net against that. It will reduce that $10,000. So you only have to pay tax on the $9,000 of profit left over. Yeah.
So there's a lot of owners. It's a very busy season in December. Like everyone's got corporate Christmas parties. People are getting married. Like there's a lot happening. So there's a lot of income coming in. One thing that we have kind of discussed briefly was making sure that all of that income we're coming in doesn't get taxed. So one of the ways that we would say is a great way to reduce taxable income is in investing in other equipment, like another photo booth, to make sure that that isn't something that gets taxed on. Would that be a good strategy?
Yes, if that's something that you would be purchasing anyway. So I tell people, when you're thinking about tax strategy, you don't want to spend $1 just to save 20 cents. You know what I mean? So a good tax strategy is, for this year, if you're looking to offset that income, if you were going to buy something in January, February of next year, buy it before December 31st, and then you get the write-off this year instead of next year and
Yeah.
having to wait until kind of like 2025 when you file your taxes
Yeah.
to get that benefit. Anything of that nature that you're already going to buy for your business, you can do that in December, take the write-off this year. And it's also important just to know, again, like what you can write off, because I tell people like the best tax strategy is being able to take something that you're already spending money on and making it a business expense instead of just personal. So something as simple as like, if you have a home office and, let's say you have, like 3 p.m. snack break.
Yeah.
Those like office snacks, if you have them in a drawer in your office, those are office snacks. You can write those off as an expense to your business. So it's something you're already spending money on. Now you've just made it a business expense. And that's just like a tiny, tiny example of like a way to do that.
I had no idea. That's a great tip.
Yeah.
Office snacks, right off. Got it.
Office snacks. Get the coffee machine in your office, right off.
Yes. Oh my gosh, yes. Christmas gift, tax write-off. Got it.
Yeah.
What's something that maybe some people would think is a tax deduction, but actually isn't?
Yes, I'm gonna just like burst people's bubbles. A few that I get questions on a lot. One is clothing. So a lot of people think that clothing can be written off. And it's very specific situations where it can be. So for the most part, unless it's like a uniform or something that has your logo on it, if it's not one of those two, then you can't write it off. Now, there are specific scenarios where it could be. For instance, nowadays we have a very different industry than we had 10 years ago with content creators and influencers. So clothing for them is part of their business. So they kind of have a little bit of different rules and whatnot with that, because it is an ordinary necessary expense for them. For everyone else, like me, I'd love to be able to write off the yoga pants I wear every day in my remote office, but I can't. And it's even things like, people think clothing for photo shoots and speaking gigs can be written off. And that's just not the case, because the IRS considers that to be able to be used for like personal use.
Got it.
So that's probably the biggest one I get. And it's the same for like manicures, pedicures. Those aren't able to be written off. And like your haircut, your hair color, that can't be. Now, if you get your hair styled for a photo shoot or a speaking gig, that can be, or like your makeup done, that can be, but like the long lasting nature of like getting your hair colored or whatnot, that can't be written off in like 99.9% of cases.
Yeah, that makes sense. I do have an extra question for you. So we have PBX is coming up in February, and it's a huge trade show. Tons of people go, and a lot of people are kind of making those plans now. So they're buying the hotel ticket or the flights, all of that stuff. Would that be something they could write off now, or because the event's in February next year, how would that work?
Typically, so most people are what they call cash basis taxpayers, which means when you spend the cash, it's the expense. When you receive the cash, it's income. So if you're spending the cash now, you can take that as an expense now.
Awesome.
Which is great, because then you get more deductions now rather than later.
Yeah, exactly. So we are at the point of the conversation where, if you have a little bit of time, I thought it'd be fun to play a little bit of true and false. So with the audience, with you, play along. Yeah. Okay, so I'm going to ask Brittany a true or false question, and I want you guys listening to think to yourself if it's true or false. So question number one.
I'll give a pause so that everyone can think before I answer.
Oh, exactly. Yes. We're going to make this really fun. Okay.
Yeah.
Number one, as a photo booth owner, I can fully deduct the cost of purchasing new photo booths in the same tax year they are purchased under Section 179 of the IRS tax code.
And the answer is true. Yes, you can. Yes, Section 179 basically is a way to accelerate what they call depreciation. So usually when you have like a high cost item or asset that you're buying, typically what has to happen is you have to do what they call like capitalize it as a fixed asset, basically meaning like you're going to get a long-term benefit from this piece of equipment. So we're going to allocate the cost of that. And you're able to get like a deduction for a piece of that over the course of so many years, just say 5 for a piece of equipment. So if you bought a $10,000 piece of equipment in 2023 and you didn't take the 179 deduction, basically what that means is over the next 5 years, you'd be able to get a $2,000 deduction each year. Now with Section 179, what that says is, hey, we're going to elect to take that full expense in this year alone and not take any expense going forward. So we'll take the full $10,000 this year. And in most cases, that's beneficial.
Question number 2. If I finance the purchase of a new photo booth, I can only deduct the interest portion of the payments, not the principal on my business tax return.
And the answer is true and false. So yes and no, I will say. So one, I do want to mention, yes, definitely can write off the interest portion. So that is a deduction. It's a business expense. So the principal payment is essentially just like a loan repayment. So you don't necessarily take the principal as a deduction. What you're taking as the deduction is the value of the asset, the equipment that you bought. So for instance, let's say you bought, again, $10,000 piece of equipment this year. You took out a loan for that. Great. What you're going to do on your tax return is you're going to, again, capitalize that $10,000 as a piece of equipment and take the $10,000 Section 179 deduction this year. And then going forward, you would take the interest deduction on like the loan repayment. So you do get basically the value of that principal repayment as a deduction, but you're just doing it in like a different way. It's kind of like if you think about credit cards. So credit cards are really just like really short-term loans. So when you buy things with your credit card and you pay them off, like you can't deduct credit card payments. Like that's not a thing. What you deduct is the underlying expense whenever you purchase it. So if you buy, again, a laptop on your credit card for $1,000, you're going to take that $1,000 expense whenever you essentially put that on your credit card. So if you do that in December 2023, you're going to claim that as a deduction on your 2023 taxes. You're not going to claim it as a deduction when you pay, $100 on your credit card in January, $100 on your credit card in February. That's not how it works.
Got it.
Does that make sense?
Yeah, absolutely.
Yeah. So you do get the benefit. It's not like if you take out a loan, you don't get the full benefit. You absolutely do.
Perfect.
Yeah.
Okay. Question number 3. Operating expenses for my photo booth business, such as props, printing supplies, software subscriptions like the Salsa software, are fully deductible in the year they are incurred.
And the answer is true. Yes, they are. So whenever you incur them, the full cost of those you can take as an expense and offset your income with them.
Perfect.
Yeah.
Okay, last question. If I use a portion of my home exclusively for managing my photo booth business, I can claim a home office deduction for that portion of my home expenses, such as mortgage, interest, insurance, utilities, etc.
100%. Yes.
Perfect.
So if you have a home office, it's essentially like whatever portion of your home that is, that's the deduction you can take. So if your home office is 10% of the square footage of your entire home, and keep in mind that includes any space used for storing the equipment. If anyone's listening to this and they also use a part of their house for like putting different things together, like that can all be included as like home office space. So whatever portion of that is a home office over the total square footage of your home, you can take that percentage times, like you said, home insurance, your utilities, your property taxes, your mortgage interest, like all of that combined, and then that can be a home office deduction. The other way to do it, so that's kind of like they call it the actuals method. There's a simplified method as well. If you just have kind of like a, let's say extra bedroom you're using, you can take the square footage of that, multiply it by 5, that's your deduction. So a 10 by 10 room, 100 square feet, it would give you a $500 deduction.
Wow. Awesome.
Yeah.
That's good to know.
Yeah.
And then I'm
great.
sure internet as well.
Internet. Yes. Typically with internet, that's, I would say, separate outside of the home office, because you can use your internet more so for business than home. It's not necessarily allocated based on your square footage. So with things like internet and your cell phone, what I tell entrepreneurs to do is really to estimate what your usage is between business and personal for those, and just make sure you'd be able to justify it if you were ever audited by the IRS. So for some people that could be, as much as 60, 70, 80% of their usage is for business. And then you do the allocation based on your total costs and just put that on your tax return as an additional deduction as well.
Brittany, this has been so incredibly helpful, and I hope everyone listening has enjoyed this conversation and learned something new. Where can the listeners find you, connect with you, and get more information from you?
Yeah, so you can always check out our website at keniceandco.com, but I pretty much live on Instagram. So you can find me at Brittany Suttle CPA or under Prosper Simply LLC on Instagram.
Thank you so much for joining us today for this interview. If you missed it, we have very special content for you that is all listed out in the description and the show notes below. So make sure to check that out, download the downloadable. And of course, if you want to reduce your taxable income before the year ends, make sure to visit photoboostsupplyco.com at the link below to check out the guac or salsa boost to add to your inventory and reap the benefits of tax savings. And as always, thanks for joining us today, and I will see you guys next time.